I only became a consistently profitable trader when I started to follow a trading playbook religiously every single day like a goddamn Bible. That's correct. This right here is the key, or rather the formula to becoming consistently profitable. Chances are, if you're watching this, you suck at trading, you are a complete failure, you have been losing your hard-earned money, and it's time to stop. It's time to get your shit together, and you do that by having a trading playbook. So what is a trading playbook? A trading playbook is your systematic approach to trading your defined edge in the market with entry, exit, and risk management rules. This means this thing right here is going to be your best friend throughout your entire trading journey. It's going to be your Bible that you refer to every single day before you trade and when you are trading. So now you are sitting there thinking about, do I really need a trading playbook? I know how to enter the trade. I know how to exit the trade. Do I really need a goddamn trading playbook? Yes, you do. You do. No matter how good you are, you need it. All right? Because chances are, if you don't have it, you are just gambling. You're not really trading. You are gambling. And the last thing you want to do is to gamble your hard-earned money, right? We want to be professional traders with an edge. So, actually, the question becomes, why do you really need to have a trading playbook? Number one is this thing called emotions. This is what you encounter when you are live trading. When you are putting your hard-earned money on the line, you will experience all sorts of emotions like greed, FOMO, fear of missing out, doubt, forgive my ugly handwriting, doubt, fear. Oh, this marker sucks. Is it this marker sucks or is my handwriting just bad? Anyways, these are some of the emotions that you are going to experience when you are live trading, and how to actually mitigate these emotions and actually not let them take control of you, because we all know that if we trade based on our emotions, you will continue to lose money at trading. You will continue to take trades even though there is no clear opportunity, and you're just gonna continue to lose and lose and lose and blow accounts after accounts. So it's time to stop. It's time to really make sure that you actually have a plan to ground you, to make sure that you are on the right track. So that is essentially the gist of having a trading playbook. The reason why we have a trading playbook is because sometimes we are going to feel hesitant, right? You're analyzing the charts and then you are sitting over there thinking like, should I enter for this trade? Even though this trade is like a good opportunity, your gut feeling is telling you to enter for the goddamn trade, but you're sitting there thinking about, should I really though? And then you don't enter the trade. And then like 1 hour later, the trade end up hitting the take profit and it actually went in the way that you actually predicted it to go. But guess what? You were too stupid, you are a complete idiot because you were hesitating like a little bitch. That's the cutthroat, right? I'm just gonna be extremely hard you guys inside this whole video. Now, that is essentially why we have a trading plan, to prevent trading based on our emotions, to actually trade based on mechanical rules, right? A set of rules that we just want to follow and execute day in, day out like a robot. Now, I like to define my trades as 4 types of trades, right? That is basically 4 types of trades. So let me just share with you my process. So there's a valid, okay, so let's say this is valid, and then this is invalid, right? So a valid trade is one that actually follows my trading plan, follows my trading playbook. An invalid trade is a trade that I take outside of my trading playbook. That means I don't really follow the trading playbook during that day. I just took this trade randomly based on my emotions, based on my feelings. I enter when I feel like it. And then there is your win, and then there is your loss. Right? Quite simply, you can just draw like a grid this, right? This is where it starts getting interesting. Right? You can draw a grid right here, separating the wins, the loss, and valid. So basically 4 types of trades, right? Trade 1, trade 2, trade 3, trade 4. Over here, this actually defines what counts as a successful trade setup in my playbook. Okay, so what I mean by that is that if I take a trade that is according to my plan, is a valid trade, and I actually ending up winning that trade, then guess what? Trade 1 right here, this is what I count as a successful trade. Okay, this is a successful trade because I follow my trading plan and I win that trade. However, let's say, same thing, I follow my trading plan, but this time round, I actually ending up losing the trade. So it's trade 3 right here, right? Now, in this time, this was still a successful trade. You heard that right. Even though I lost money on that trade, it is still counted as a successful trade in my playbook because I followed my trading plan. And the market is random and it's all just a probability game. That means even though you can be extremely confident in your trade, you can have all the confluences for you to actually line up in that particular trade setup, and you can actually follow your trading plan and end up still losing that trade because the market is random. The market is a game of probabilities. So what if you don't follow your trading plan? You don't follow your trading plan and you actually are winning that trade. So trade 2 right here, right? This is what I call a lucky trade, right? This is what I call a lucky trade. Where you actually, you're just randomly looking at the charts, you didn't really follow your trade setup, your trading playbook, and you still end up winning that trade. In that case, guess what, buddy? You got lucky. It does not mean that you're the best trader in the world and you're going to buy a Lamborghini next week. No, you got lucky. Lucky trade, what does this mean? This means that this type of trade setup, you need to be extremely careful. You need to be careful and actually go through to see whether that trade setup is actually congruent with your trading playbook. If it is not, then completely eliminate it. Chances are, like I said, you got lucky, you win that trade, take that money, but it is counted as a bad trade in my playbook. So yeah, I would not want to repeat this. And then the worst trade that can possibly happen is if you don't follow your trading plan and you lose that trade, right? This is clear as day, what I call a stupid trade, right? First of all, it is already stupid that you didn't follow your trading plan. You are an idiot if you don't follow your trading plan. Secondly, you end up losing the trade because you didn't follow your trading plan. Cause and effect, buddy. Whatever you do, there's consequences. Actions have consequences. So in this case, when you take a stupid trade like this, right, you need to sit there and reevaluate and just think about what you should do next. How can you actually improve? By having a trading playbook, by creating a trading playbook. Because if you have a trading playbook, it doesn't matter about this, right? That will just completely wipe out this invalid part of your trade setups. And all your trade setup will be valid because you have a trading playbook and you actually follow it religiously. Right here. So that is essentially what we're going to do in this whole long-ass lesson that I'm going to share with you guys today. I'm going to share with you guys how to actually create a winning trading playbook so that you can actually get more of these successful trades that actually work, that actually make you money consistently rather than losing trades. And that's just the gist of this video. Let's get rid of that. Now, before I actually dive into the 6 factors that actually constitute a winning trading playbook, I want to talk about the process that you can use to actually refine your trading playbook. Because chances are, this could be your first time creating a trading playbook. And if it's your first time, trust me when I say that it's not going to be your last time because the markets are evolving. The markets are changing every single time. All we can do as traders is to adapt to the market, right? Adapt to the changing market conditions. We cannot control what the market is going to do, but we can control what we do, how we trade, where do we actually enter for the trade and where to get out of the trade, and what lot size we can use on the trade. These are things that are within our control, right? So essentially, very, very simple. First step is to create the plan, right? That's the first step. Create the plan. So doing this plan, you need to write out a few main factors, which I'm going to go through in depth later, but basically things like where are you going to enter for the trade? Where are you going to get out of the trade? What if the trade does not go in your way? Do you have a backup plan? And also, what is your risk management rules in place to ensure that you actually minimize your loss and maximize your profit? So that is the first thing you need to do, create a plan, right? This should be the first step inside your trading journey. It doesn't matter if you've been trading for 1 year, 5 years, 10 years. This should be the first step. If you don't even have this step in the first place, you already lost. You don't even stand a chance against the other traders, and you're just gonna let the other traders steal your hard-earned money if you don't do this. So this is the first step, create a plan. Once you create a plan, chances are, like I said, this is not going to be a perfect plan, especially if this is the first plan that you have. It's not going to be perfect, and there's going to be a lot of flaws and mistakes. But like I said, this is somewhat like a draft, right? It's not the final plan yet, it's a draft. So the next step would be to actually test out the plan. So you have a plan, you know exactly where to enter for the trade, where to actually get out of the trade, and what trading style are you going to be using. Are you going to be scalping or swing trading or whatnot? You know exactly what you need to do. The next thing is do it. Go and actually go test the plan. How you test the plan? There's two ways we can actually test the plan, or what are three ways actually. You can do what I call a back test, right? Or you can do what I call a front test. And you can you can trade live, right? So backtest is where you actually go on the trading view, or you use a backtesting software and actually go back in time and actually analyze the data based on your plan. So you know how TradingView got this bar replay tool, we can just go back to like days or even a few hours before where price currently is right now and just backtest to see whether the trade actually works, right? So you can backtest, you can have like 10 trades or even 100 trades, and then just test it out based on the plan, right? Just follow the plan, doing these 100 trade setups and see how many trades actually end up working and how many trades actually end up failing. And ideally, you want to have at least like a 6 out of 10, right? At least like a 60% win rate so that you can kind of know that your trading plan actually works, right? The reason why I say 60% is because no way I'm going to sit here and tell you that your trading plan is going to be a 100% win rate. There is no way. Any trading guru who tell you that your win rate is 80%, 90% is bullshit, is lying to you. I myself have the 50% win rate. Professional traders have a 50% win rate, right? Hedge funds have a 50% win rate. So you're telling me that your trading strategy is the holy grail? Shut the fuck up. So that is 6 out of 10, right? You just need a 6 out of 10 to prove that your trading plan actually works. Next, what you can do is also a front test. A front test is where you actually go on a demo account and you actually just test out, right? Take some demo trades, buy or sell according to your plan, right? If you see your trade setup, press the buy. If you see your trade setup on a bearish downtrend, press the sell, right? That is how you can actually front test your trading plan. Next is the live, right? You can actually test it out on the live account as well. I wouldn't really recommend you to do this. If this is your first trading plan, go ahead and backtest or front test, right? Don't waste your hard-earned money, please, because capital preservation is the goddamn like epitome of trading. You want to respect your money and you don't want to waste your hard-earned money on the first draft of your plan. So just backtest and front test it. I actually recommend you to do that, right? Just see, I'm a good guy. I'm a hero here. I'm trying to save you from losing your hard-earned money. Next, after you test, your next thing is actually trade, right? Now, like I said, once you get this 60% win rate, that is when you can actually potentially use this plan on a live account or even a demo account, right? Actually test it out in real time, right? So this is like really live trading where you are not really looking at the past data, you are looking at the data that is right now, the present data. So test it out, trade it out, and just trade in real time to see how that plan works. And after you take a few trades, right, you will realize that there's going to be a few losses, there's going to be a few wins, and then there's going to be losses, wins, loss, win, right? It's going to be like this. In that case, when this happens, what you need to do next is to identify the trade setups that have been working and the trade setups that have not been working. And then your job is to do more of what's been working and do less of what's not been working. As simple as that. You want to memorize the setups that have been working for you. Burn it into your subconscious mind, right? And chances are you can let these setups stay inside your trading plan. Now, what about those trade setups that have not been working, right? Then get rid of them, right? Do less of what's not been working and do more of what's been working. And that is when you can actually refine your plan. So refine your plan is that we really make sure that you think about how you can improve your trading plan. Maybe you can refine your entries and enter with much more precision, or you can even have a tighter stop loss or a wider take profit. Whatever it is, you want to refine your trading plan and just based on the results that you have tested and you have traded, right? That is where you get the results. Look through it, think about what you can improve and refine your trading plan. And after you're done with refining your trading plan, that is when you can tweak your trading plan, right? Tweak your trading plan, actually see what's been working, what's not working, and then test it out, and then refine, and then tweak, test, refine, tweak, test. This is like a cycle where you can continuously improve. And this, like I said, is going to be how it's like for the rest of your trading journey. Till today, after like 4 years of trading, I am still refining my trading plan, right? If I see some sort of flaw, which happens because, like I said, the markets are changing, right? What works for me 3 years ago is not going to be working for me right now as well, right? So I have to always be refining my trading plan. Example, at the start, I'll be addicted to scalping, right? I love scalping. I love the adrenaline that you get when you enter for the trade and you see this huge spike in price and you get out after 5 minutes, making $1,000 in like a few minutes. I love that adrenaline. But right now, I'm an old man. I don't give a shit about that anymore. I'm more relaxed. And that is why I changed to swing trading right now. So you can see, I was able to refine my trading plan. I was able to test out my trading plan and actually find out ultimately what works for me and just kept doing what works for me. So this is essentially what you actually need to incorporate, right? Like I said, this is going to be the rest of your trading journey. If you think that trading is going to be all about fast cars and big mansions and stacks of cash, you are wrong. It's extremely boring, and this is what you're going to be doing for the rest of your trading journey. That's just the cold hard truth, buddy, right? Like I said, right? It is extremely boring. Like profitable trading, professional trading is extremely boring. I'm just not going to sugarcoat you to it. So if you think that you're gonna be, having like a James Bond lifestyle after you become a trader, no. Because if you want to become a better trader and actually improve and become the best version of yourself at trading, you need to do the boring stuff that actually works. Now let me discuss, how do you actually create a winning playbook? Right? Quite simply, a winning playbook consists of 6 things, right? 6 core factors that you need to incorporate inside your playbook. Firstly is your goals. Secondly is your style. Thirdly is mapping. Fourth is entries. Fifth is exit, and 6th is risk. So this is essentially the 6 factors that needs to be inside your playbook. So if you are creating a trading playbook and you actually want to become consistently profitable, you actually want to treat trading seriously, not just as a hobby, not just as a job, but as a business, you need to incorporate these 6 factors inside your trading playbook. And now I'm going to go through in depth each one of them so that you guys can actually, create a winning playbook that works for you, because all I want is for you to become successful. That is why I've been creating all these long as valuable videos. If you look at my YouTube videos, it's like freaking 40 minutes, 1 hour long. Compared to other trading videos online, you'll see it's like freaking 5 minutes. How the fuck gonna learn anything from 5 minutes? My videos are real hard education. Education with a massive amount of value. It's not just those hyper-edited videos where and then the YouTuber starts saying, this video is sponsored by James Bet. Shut the fuck up, right? So you can see my video has no sponsor whatsoever because I don't want to cause you guys to lose your hard-earned money. Like I said, I'm a hero here. So let me just go through one by one. Okay, the key to the winning trading playbook. The successful trader, All right, so let me just close everything so that I can actually get focused inside here. So maybe, what marker should I use? Fucking hell. So first step is goals. Blah, 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 here we go again, talk about goals again. All right, goals. So what do you want to achieve from trading? Now, the reason why it is so important that you put this thing as first, and I didn't put entry or exit or risk as first, is because goals is going to remind you of why you have been working so hard for. What is your why? Why do you want to succeed at trading? What is your underlying why? Oh, because I want to get financial freedom. Oh, because I want to get rich. Okay, how rich? Do you even know how rich you want to be? Do you want $1 million? Is that counted as rich? Or do you just want 5K per month? You need a clear, defined goal and a specific and measurable goal. And most people just wander around, don't even know exactly what they want, and they expect that thing to just magically land in their laps. No, God doesn't work in that way. God is very forgiving. The universe is very forgiving. It's going to give you exactly what you want in life, as long as you know what you want and you actually work your ass off for it. So what is it? What is it exactly that you want? Right? For me, like I said, I wanted to retire my parents, and then I also wanted to provide my future kids a life that I never had, and I wanted to make $1 million. You see, clear defined goals, right? I know exactly when I achieve those goals, then I know that I've already achieved them. It's not like I want to be rich, right? If I set a goal that I want to be rich, how much is rich? So clear defined goals, very, very important. Next, just spend some time to do this, all right? Just take your time in this. Just sit there, close your eye, think about what you really want to achieve from trading. So let's just pretend that I'm in your shoes right now. So let's say my goal is to actually make $5,000 per month from trading, right? And I also want to quit my full-time job, which I fucking hate, right? So maybe this could be your goal, or you could even want to travel the world, right? Once again, everything happens twice. First in your mind, then in reality. Once you set these goals and you work your ass off, I guarantee you that you will achieve these goals. Whatever goal that I set for myself at the start of my trading journey 4 years ago, I achieved them. I got everything I wanted in life. I made my first $1 million. My dad is retired, and I don't have kids yet. But in the future, when I have kids, I know for a fact that they're going to be set for their entire life, right? I've achieved everything I want in life because I set clear, defined goals. So what are your goals? Think about this, right? Because there's going to be times where you're going to lose your trades. You're going to enter a losing streak. You're going to blow multiple life accounts. What will keep you going? And if you ever feel like quitting, just remember why you started in the first place. This is my strongest motivation that I can give you right now. So that's the first step you need to do. Set clear, defined goals. Like I said, clear, defined, right? Don't just sit there and say, I want to be free, I want to be rich, I want to have a girlfriend. Shut the fuck up, man. Next is to actually have, or rather determine your style, your trading style. You see, everybody have a different trading style because everybody have different personalities, everybody have different life conditions. Some people might work a 9 to 5, some people might still be in school, some people might be full-time trading. Everybody is different. Like I said, this whole point about this winning playbook is that you don't want to follow my exact playbook. You want to actually create one that is suitable for you, that is designed for you. This playbook is not for me, it is for you. So as you are doing this with me, you are mapping out your goals, you are determining your trading style, you need to think about what works for you, because what works for you might not work for me, what works for me might not work for you, right? Simple. So what is your trading style? T. Is it scalping? Is it intraday trading? Is it swing trading? Is it position trading? These are basically the 4 types of trading style that we have, right? So for those people who are not familiar with it, let me just explain to you guys. So let's say this is scalping, and then this is intraday trading, and then this is swing trading, and then this is position trading. So scalping is where you're getting in and out of the markets fast, right? Within 5 minutes, within 30 minutes, you're out of the market. Basically less than an hour. You're inside the trade for less than an hour. That is scalping. Intraday trading is within 24 hours. Let me just put that down. Less than an hour. And then intraday trading is within the day itself, right? You're getting in and out of the trade within 24 hours. Swing trading is above 24 hours, where you're holding the trade for maybe more than 24 hours, a few days, or even up to a few weeks. That is swing trading. Position trading is more long-term wise, where you are holding the trade for weeks or even months, right? So based on this, determine what is your trading style. And the question that I have for you is, what is your schedule like? If you're working a 9 to 5, you cannot be trading during the 9 to 5, then most likely a swing trading will be much more better approach for you, right? You can actually enter the trade on Monday and then get out on Friday without really like micromanaging a trade and just staring at the charts all day. Then swing trading, it is for you. Maybe you have school, right? Monday to Friday, you want to be studying and you only want to be trading during the holidays. And when it comes to the holidays, you really want to go all out onto the charts. In that case, you might want to scalp, right? Holidays, you got a lot of free time, you want to look at the charts every single day, you love the adrenaline, in that case, scalping, right? So like I said, that's the first question. What is your schedule? Next is your personality, right? If you are a guy who is very relaxed, very chill guy, in that case, swing trading, right? You don't really have to stare at charts all day. You don't have to suffer high blood pressure. You can sleep peacefully, swing trading. If you are a guy who is, you're just in between. You are not really aggressive, but you're not really conservative. In that case, go for intraday trading, right? Where you're just getting in and out of the trades within the day. So when it comes to determining your trading style, right? These are the factors. Another factor would be your lifestyle, right? What is your current lifestyle like? Like I said, if you are a digital nomad and then you have a lot of time to trade, then you can choose any, right? Any works for you. So really make sure that you ask yourself these three things. What is your schedule like? What is your personality like? What is your lifestyle like in order to determine your trading style? The last thing you want to do is to try to do all four. You try to become a scalper, you try to become an intraday trader, you try to become a swing trader, and you try to become a position trader. And you end up being jack of all trades, master of none. In trading, it is extremely essential that you just focus on mastering one, right? Just one. Focus on mastering one. If you are intraday trader, focus on getting extremely good at intraday trading and not scalping or position trading or whatnot, right? If you're good at scalping, then just focus on scalping. My advice would be to actually go and experiment with all of them, right? That is what I did at the start of my trading journey. I was a scalper, I tried intraday trading, I tried swing trading, and I also tried position trading. And I found my sweet spot. My sweet spot is somewhere around here, right? Between intraday trading and swing trading. So to be honest, I'm a mix between these two, right? And when I say jack of all trades, master of none, I'm a master of like a mix between these two. That means I'm able to intraday trade, I'm able to swing trade. That means that if I enter for the trade and I'll hold it all the way till my take profit, it doesn't matter if it's days or weeks, I'll just hold it all the way till my take profit. That is what I mean when I say that it's somewhat in between intraday and swing trading. So that is the first part of your trading style, right? So there is other questions that you need to ask yourself when it comes to determining your trading style. Is if you are trading, okay, what instrument are you trading, right? Are you trading stocks? Are you trading Forex? Are you trading crypto? What are you trading? Once again, you don't want to be trading everything. If you are just starting out, a completely new trader, don't go and start to trade everything, right? If you are experienced, you have been inside the market for 10 years, then by all means, you can do you can trade everything. But if you are just starting out, focus on one thing. One thing is all you need. The power of one is extremely powerful. So I myself started off with stocks actually. I started investing with stocks, bought my first Apple stock and Tesla stock, and then I fell in love with the financial markets, and I felt like, okay, stocks is good, right? But it's only open for 8 hours every single day. I want to trade during the day as well, right? In that case, that is why I shifted to Forex, because I wanted to trade during the day and the stock market is only open at night for Singapore time. In that case, like I said, I was always focusing on one. Once I went on to Forex, I stopped trading stocks completely, right? And I never really touched crypto. I remember that one time where I bought a Dogecoin, lost $100 and never touched it ever again. So what do you actually want to trade? Stocks, forex, or crypto? And narrow on one, right? So if you are trading forex, the question becomes, what currency pairs will you be trading? Are you going to be trading Euro USD or GBP USD or AUD JPY or Euro JPY or Swiss franc, or I don't know, there's a lot of currency pairs out there. What currency pair are you going to be trading, right? I would advise you to stick to three, right? Stick to three currency pairs and just focus on 3 to 4 currency pairs. So find that out for yourself, and essentially that's the second thing you need to know when it comes to style. Another thing is actually what trading session will you be trading, right? If you're watching this, most likely you are a forex trader, and there's going to be 3 types of session: your Asian session, your London session, and then there's also your New York session, right? Which trading session will you be trading? The last thing you have to do is to wake up in the morning, straight away go to the charts, and then you stare at the charts all the way until the time that you go to sleep. So you end up trading all 3 sessions, and you might win some money in the Asian session, right? You win some money, you win some trades here and there. You make $100, and then you go continue trading the London session, and then you start winning some trades as well, right? You end up being up like $200 for the day already. And then you continue trading because you are a greedy motherfucker. And you go on to New York session, and you start losing one big trade, and you end up losing the $200 that you make during the entire day, and you end up over trading, and you actually end up losing even more money, and you actually end up losing $300 throughout the entire day. Wow, you were up $200. You were up $200 in the morning. You could have stopped, but you choose to be greedy and continue to trading the whole entire goddamn day. That is why I'll advise you guys to just stick to one session. I personally trade the London session. And when it comes to what session to trade, it also depends on whatever time that you're free, your schedule, like I said, and also the currency pair that you're trading, right? Some pairs move differently. Example, AUD, USD move a significant amount during the Asian session and the London session. Or gold might move well, is volatile during the all 3 session. Or Euro USD, it could be much more volatile during the London session or the New York session, right? You can see every currency pair is different. I'll advise you to go research on this. Because obviously, if I talk about what currency pair you should trade during each session, this video is going to be like freaking 10 hours long or some shit. So that is for style. Basically for style, right, you need to determine 3 things, right? What currency pairs are you going to be trading? What trading session are you going to be trading? And what is your trading style? Is it scalping, swing trading, or intraday trading, or whatnot? So the next one is actually what I call mapping. Oh my god. Come on, I have OCD, man. I can't have these little dots on my screen. So, next one is actually what I call mapping. Now, what the hell is mapping? This is probably your first time hearing this term. What the hell is mapping? Mapping is basically the time frames that you're going to be using to analyze the charts and entering the trade on. What is the best time frame to trade on? Comment down below the answer. What do you think is the best time frame to trade on? Is it the 4-hour time frame? Is it the daily time frame? Or is it the 5-minute time frame? My answer is there is no best time frame. It all adds up together. You need to make sure that you use both the higher time frame and the lower time frame as well. So this is where I do what I call my top-down analysis. My top-down analysis is where I'm analyzing the charts from a higher time frame down to a lower time frame. So I might start off with the daily time frame. So this is where I actually look at the overall market structure, right? I look at the overall trend direction and the market structure to see, is price creating swing lows, swing highs? Is price creating higher highs, higher lows, or lower highs or lower lows? Or is price just consolidating? I identify the trend direction and I look at market structure on the daily time frame. And I also use it to mark any major significant key levels, right? Major key levels. That's what I use to mark on the daily time frame. And then I will go down to the 4-hour time frame. This is where I identify my point of interest. right? What is point of interest? It's basically your key levels, your supply and demand zones, your order blocks. So all those are things that I will further identify on the 4-hour time frame, my supply and demand zones, and then also my order blocks, or your support resistance, your trend lines, whatever, right? So 4 hour is for point of interest. And ideally, what we want to do as traders is that we want to wait for price to get to a point of interest, like a supply and demand zone, and look for our entry there. I'll talk more about entry later. Next, I would most likely go down to the 15-minute time frame, and this is when I am looking for my entry, right? This is where I look for my confirmation signal, right? Confirmation signal to tell me whether I should enter for the trade or not. Because like I said, we don't want to enter anywhere anyhow. We want to wait for the perfect time to enter for the trade. And the perfect time is usually right before liquidity enter into the market. You know, right before the smart money enter into the market, we are able to get in here. And then when the smart money enter, they're able to push the price in the direction that you want in like a significant way. So that is where we are looking for our confirmation signal, like liquidity, your candlesticks as well. Yeah, right there. So you can see this is essentially how I do my top-down analysis, how I do my mapping, right? I want to be very, very clear on what time frame am I going to be using, because I don't want to be stuck in the smaller time frame. When you are getting stuck on the smaller time frame, you might be confused, right? Because the smaller time frame might show like a downtrend, right? But if you zoom out and you look at the higher time frame, like the daily or the 4-hour time frame, price is actually making a huge uptrend, creating higher highs and higher lows. And this little downtrend that you see right here on a smaller time frame is actually a fractal version of a retracement on a higher time frame. So in reality, you will never ever know when the overall smart money is going to come in and wipe you out and just continue pushing price up in the overall trend direction, which is the bullish order flow here. So that is why it's important that you do a top-down analysis, right? I analyze my charts on a higher time frame, and then I actually go down to the smaller time frame to look for my entry. If you want to learn more about this, I have a full course on it. It's called top-down analysis, which you can just search on my YouTube. So that is for mapping. Now, next is, I believe, what you guys want to learn about the most, and that is your entries, right? So the reason why we want to put our entries inside our trading playbook as well is because this will help us to determine exactly where to enter for the trade and where to actually get out of the trade. I mean, where to enter for the trade, right? Because when you are trading, you have done your analysis. Now the next question becomes where to enter for a buy, where to enter for a sell, where to enter so that you can have a tight stop loss and a huge take profit. In that case, that comes down to entry. So I have a few tips for you when it comes to entry, right? Personally, I have this one key rule, and that is only enter the trade at the point of interest. This means I don't care if price is doing what it's doing right now. I will only care if price comes down to a significant point of interest, like a supply or demand zone. That means all the candlesticks right here in the middle of nowhere that is not at a key zone, I will not be paying attention to it. This is very, very useful because a lot of times when we look at the chart, we start getting confused, right? You see price going up here and then start going down and start reversing. It's a lot of confusion and a lot of overwhelming information that is not actually useful. You just need to focus on what price is doing currently and when price get to a point of interest. This means if price is just moving, it's in the middle of nowhere, I will not be giving a shit. I'll be patiently waiting for price to get to my key zone. It could be a demand zone, or it could be like a supply zone. I'm going to be very patient to wait for price to get to my point of interest. Once again, like I said, if price starts reversing at this demand zone, right, and it's already somewhere right around here, guess what? I will just suck thumb and just move on. I will accept that I already missed the opportunity to enter for the trade right here. Now, my next step is to wait for price to actually get to this supply zone, and that is where I can look for my trade setup. This is how I trade. right? I won't be trading my price in the middle of nowhere. I want to enter at a point of interest. Why? Why do I want to enter at a point of interest? Because when you enter at a point of interest, you get a tighter stop loss. And that's all trading is. It's all about minimizing your loss and maximizing your take profit, and actually thinking about how you can reduce your downside and actually have your upside has like a limitless potential. So in this case, if I enter at a point of interest at a demand zone, I enter for a buy right here. Guess what? My stop loss will be right below this demand zone. And this will be my take profit potential. Right? You can see how wide the take profit is compared to the stop loss. That means if I lose, I'll probably lose about 1%. If I win, I'll probably be up about 8% or something. Compared to if I actually enter for the trade in the middle. So let's say price reverse at the supply zone and it's already all the way down here, and I enter for a sell right here. My stop loss will be above this supply zone, and my take profit will be below this at this demand zone. And you can see this was probably about like a 1:1 risk to reward ratio. So I'm risking 1% to make 1%, and that is just not worth it. It's not part of my playbook. So that's my first rule. I want to enter at a point of interest. The second rule that I have is that I want to wait for confirmation. Right? Wait for some sort of confirmation signal for me to enter for the trade. Because how do you know that price is going to respect this demand zone and it's going to reverse and hit back up? We don't. We want to wait for signals. We want to wait for confirmation that tell us that, okay, price is actually going to reverse right now. And then that is when I can potentially enter for the trade. So confirmation comes in the form of candlesticks, right? So example, if I see price heading down towards this strong demand zone, right? And I start seeing the momentum of the selling pressure starts fading away. You can see this bearish candlestick start getting smaller and smaller and smaller. So once bearish candlesticks start getting smaller and smaller, that is the first sign that tell me that the sellers are going to fade away. The selling pressure is going away, and we should be potentially looking for a reversal at a demand zone. At this demand zone, price is going to respect it and it's going to go back up. Buyers are going to step in and overwhelm the sellers because the sellers are disappearing. So in that case, I'll be observing the candlesticks that is forming at this demand zone. So it's probably going to do something like this where it goes down, create a long wick and then create a bullish engulfing candlestick like this. When this happens, most likely I will enter somewhere right around here, right? Enter somewhere right around here. Now, personally, ideally, I want to have a liquidity sweep happen, and I also want to wait for price to get to a supply to demand flip zone, right? Market mechanics. But this is somewhat like a basic price action, right? If you're trading price action, this will most likely be your entry model. You wait for the momentum to be lost, and you wait for a shift of market momentum, and that is when you can actually enter for the trade right there. So that is an example of a confirmation, right? You enter after the selling pressure has faded away and the bullish buyers step into the market. So that is really all it is when it comes to entry. You want to enter at a point of interest and you want to wait for confirmation. Damn, this video is long, bro. It's like 40 minutes already. So if you're still here, give a pat on your back. I really respect your focus and your attention. I'm trying my best to articulate my thoughts here and try to provide you guys with as much value as possible. So if you are still watching this, yeah, you're good job, bro. You are probably on the way to becoming a top 1% trader. Next is actually, it's fifth, right? Is it fifth or fourth? I think it's fifth. Yeah, it should be fifth. Fifth is exit. When it comes to exit, there's only two ways, or rather three ways where you can actually get out of the trade. You can manually close the trade, or you can actually get out with a stop loss and a take profit. Right? So in that case, like I said, it is extremely important that you always have a stop loss no matter what. Because you must go into every single trade with the assumption that it is not going to go as planned. Let me repeat myself. You must assume that every single trade is going to go wrong. You cannot go in thinking that you're going to win that trade. You have to go in thinking that you're going to lose that trade. Because if you do that, you will be sure to place your stop loss. To place it at a price which you will actually invalidate your trade setup, and you're able to protect your capital and protect yourself from losing a massive amount of money. So place your stop loss, and this is essentially where you want to place it at a price where you will actually invalidate your trade setup. Okay? So if it's based on price action in an uptrend, price is creating high highs and high lows. If you're entering for a buy right here, your stop loss will be below at the last higher low. If it's a downtrend, your stop loss will be above the last lower high. Right? So if you're entering for a sell right here, your stop loss will be above the last lower high. And if it's based on supply and demand zone or support and resistance level, very, very simple. If you are entering for a buy at a demand zone, your stop loss will be below the demand zone. If you're entering for a sell at a supply zone, your stop loss will be above the supply zone. And it's very important that you actually give your stop loss a breathing room, right? Or rather more breathing room, because a lot of times what price will do, or rather what smart money will do, is that they'll purposely push the price down to trigger all your stop loss, because they know for a fact that you are a retail trader and these are the only places that you're going to be placing your stop loss. So there's going to be liquidity around here, right? Because when you lose a trade, you add liquidity into the market. So smart money is very, very wise, right? They know that and they're going to purposely push the price down, trigger a stop loss before going back up. That is why it's essential that you actually really make sure that you give your stop loss a little bit of breathing room. Don't put it too tight, like right below the key level or right above the swing high. Give it a little bit of breathing room. Next, you want to place your take profit at, I would advise, the next point of reversal. Or the last swing low. The last swing high or swing low. This is where I personally place my take profit. If you look at all my videos, you will see that the only place that I place my take profit is actually the last swing low or the last swing high. The most recent swing low or swing high. What does this mean? So let's say that price is in a downtrend, uptrend like this, and then eventually reaches some sort of supply zone and you actually end up selling at this area here, right? It's a supply zone right here, and you actually end up entering for a sell, maybe somewhere right around here. You enter for a sell right here. And then price starts going down. In this case, where do you think your take profit should be? My take profit will be at the last swing low. So how do I get the last swing low? I look towards the left. You see, you just need to look towards your left, see where price last stopped at and reverse at, and that is where you place your take profit. So if you look towards the left, you will see that, okay, right here, this is where price last stopped at before the big push, right? So this is your last swing low, and this is where I'll be placing my take profit. As simple as that, guys. There's no need to complicate things or whatnot, right? This is where I place my take profit at the last swing low, because I know for a fact that there's going to be demand at this area, right? Because the last time price was down here, the buyers pushed the price up and then take this significant move. So the next time price is going to come down here is going to be pushed up also, right? There's going to be demand, there's going to be buyers pushing the price up, even though it's a downtrend, even though it's a selling momentum, right? But chances are the selling pressure will fit around this demand zone and the buyers will take over and push up, creating a retracement before price continue to go down even further. So I just place it at the last swing low, right? And if it's an uptrend, then I'll place it at the last swing high. Always look towards your left and see where price last stopped at. So that is essentially what it takes to really exit a trade. And for take profit, right, this is more of like a mechanical, or rather a trading take profit. There's also another way where you can place your take profit as like a fixed take profit, right? So when it comes to a fixed take profit, right, it is actually based on your risk to reward ratio. That means if you have a fixed 1:3 take profit, if price reaches 1:3, right, that means it could be somewhere right around here. You could be up about 3%, you would have manually gotten out of the trade, right? Instead of letting price go all the way down to swing low or swing high, you just get out as a fixed 1:3 risk to reward ratio or fixed whatever ratio. Just get out. And in that case, this will actually be quite good, because a lot of times when you do this, right, when you place a take profit based on the last swing low or whatnot, your risk to reward ratio could be kind of fucked up and it's quite inconsistent. Sometimes it could be 1:5, 1:6, and then sometimes it could be 1:2. It's quite inconsistent. But if you have a fixed risk to reward ratio of 1:3, that means every single setup that you have, if you win, you'll be winning 3%. If you lose, you'll be losing 1%. In a way, it's more consistent because you can lose like 3 trades in a row and you will only be losing like 1%, 1%, 1%. And then the next few trades you actually win, then you'll be up like 3%, 3% every single time that you win, and you lose 1% every single time. In that case, it's much more easier to become consistently profitable, right? Because when you lose 1%. When you win 3%. Then in that case, you can see if you add up, right, this is probably 6%, 3%. So you probably made about 3% on this trade, right? You lost 3%, but when you win, you made over 6%. So your total net profit is about 3%, right? So you can see in this case, it's more easier to become consistently profitable, right? You lost, even though you have like a 50% win rate right here, or whatever, this is what? Yeah, it's about okay, around that 60% win rate around there. And you still end up making a profit. No, 40% win rate, sorry, 40% win rate. So yeah, man, okay, let me get the duster. Where the hell is the duster? Oh, right here, buddy. Now it's the last part, right? Finally, it's the goddamn last part, man. I hit like a heavy gym session just now, so I'm a little bit sleepy, so forgive me if I start like slurring my speech and shit, right? Forgive me, bro. I did like 100 bicep curls, bro, while you're over there sitting on your fucking couch watching Netflix and shit. Yeah, so I did a heavy back day, and then I ended off with 100 curls because my friend was trying to challenge me and say, hey bro, can you do 100 reps of bicep curls? Oh, fuck yeah, I can. So next, the last thing I want to go through is, let me get some tea in, guys. Right, you can take a break and absorb whatever I just said just now. Last thing. The last step is what I call the entry, exit, and the risk. The risk management part of your playbook is actually one of the most important part of your playbook. If not, it's the most important part of your playbook. You need to have a well-defined risk management plan. This means you need to know what is your minimum risk to reward ratio that you're willing to accept, how much money are you willing to risk on each trade, and also what is the maximum account exposure that you are willing to get into your drawdown, right? So like I said, a few things. Firstly, I recommend you to have a 1:3 risk to reward ratio. Because if you lose, just like I already mentioned, if you lose 1%. If you win 3%. So this is my minimum, right? At least 1:3 risk to reward ratio. So that's the first thing you want to actually define, your risk to reward ratio, right? This means that if the trade that you are taking next has a less than a 1:3 risk to reward ratio, maybe you could have like a 1:2 risk to reward ratio. In that case, you don't take the trade. As simple as that. If it's not at least 1:3, don't take the trade. Right? For me, the bare minimum is 1:2. That means anything less than 1:2 is like 1:1.5, right? Just don't fucking take that trade. Like literally just stay off the market. So this is my bare minimum, honestly, 1:2. So by right, it should be 1:2. Right? But the best is 1:3 and above. Right? The higher the better. Next, how much percentage of your total capital are you risking on each trade? I'll actually recommend you to risk about 1% on each trade. Every single trade you risk 1%, that means you can lose 100 trades in a row before you actually end up blowing your entire account. So this is the 1% rule, just stick to it, all right? There is no other way to put this. There's no like complicated risk management strategy. Just follow this. Risk 1% of your total account every single day, not on every single trade. That means if you have $100 in your account, you should be only risking about $1 on each trade. And based on this, you can calculate your lot size. Next, your drawdown. When it comes to drawdown, what is the maximum drawdown that you're willing to accept in your account every single day? I'll advise you to just stick to 5%. Right? Just stick to a 5% maximum account exposure. Because if you are risking 1% per trade, you just need to have like less than 5 trades in drawdown and you'll be good, right? So stick to this and you won't go wrong. Like I said, risk management is very important. I can't emphasize the importance of this. Once again, I have like a detailed course on each one of these factors that I talk about. I teach you guys how to enter and exit the trades. I teach you guys where to actually, get your risk management right. What is the correct risk management strategy? I teach you guys how to actually set goals. All of these factors that I just discussed in this video, you can find them on my YouTube channel. Or you can even join my free community, the Trading Tribe, link in the description, where you can get access and learn all of this. So yeah, that's all it takes to actually have a winning playbook. And like I said, you need these 6 factors. Once again, let me recap myself. Firstly, you need... my brain is not working right now after like fucking 1 hour of talking. Firstly, you need goals. Secondly, you need style. Figure out your trading style. Thirdly, you need to map out the time frames that you're going to be analyzing the charts on and you're going to be entering the trades on. Next, you need entries. Where to enter for buy, where to enter for sell. Next, exit. Where are you going to get out of the trade? And lastly, your risk management rules. Based on this, go out there and actually create your own playbook, right? You could be doing this right now, right? You could be writing or whatnot, but make sure you store this playbook somewhere inside beside you. Basically, when you are trading or before you trade, refer to this playbook. This will be your best friend. This will be the Bible right here, right? So give you a keys, right? This will be Bible right here, right? So every single day before you trade, pull out this playbook. I recommend you to actually do this on this app called Notion, right? It's a very beautiful app. You can use it, you can pull out your playbook on this Notion, and every time when you are trading, put out TradingView and also Notion. Then you can always refer to your playbook. So like I said, follow this religiously, like it's your Bible, like it's your best friend, because you can do this, you will become consistently profitable. And like I said, always make sure you tweak your trading plan, right? What works last time might not work now anymore, right? Continuously tweak your trading plan because you might be a completely different person now. And the markets are also changing and ever evolving. So do that. And then lastly, also make sure that you really take into account your own personality, your own trading style, and then come up with a trading plan, a trading playbook based on that. Don't copy exactly what I've said right here, because like I said, what works for me might not work for you. Just now for the entry, it was based on price action and a little bit of market mechanics. But you might be a ICT concepts trader, or you might be a smart money concepts trader. In that case, go and just find out what works for you and stick to that. Right? And continuously backtest and test out your trading plan and tweaking it and refining it, and eventually you have this trading plan that is like your ultimate millionaire playbook that you can refer to day in, day out, and you follow it religiously like your life depends on it, and you will become successful. I know you will, right? I know you will become successful because I'm doing everything I can on this YouTube channel to help you guys become successful. Like I said, I don't think there's any other trader inside this industry that's willing to do like 1 hour lectures like this, where it's just me talking against the whiteboard, providing you guys with as much value as possible. I don't think there's any trader out there that is willing to do this. So like I said, I'm not a trading guru. I will never will be. I'm just sharing with you guys the reality of trading and helping you guys and doing whatever it takes for me to help you guys become profitable. So yeah, join the trading tribe, link in the description. It's for completely free, nothing to sell you here. Just join the trading tribe, bro. Make some new friends, discuss trade setups, and just level up together. And as always, remember, you're just one trade away. Mwah.